You know an uptrend consists of higher highs and higher lows. And a downtrend consists of lower lows and lower highs. But I'm sure there are many instances whereby you look at a chart and you do not know what the trend is. Is it up? Is it down? Or is it in a range? And this is the problem I would say most new traders face, right? They can't identify the trend objectively. So in this video, I will teach you step by step on how you can actually define the trend objectively without second guessing yourself. Okay, so I'm sure you know how to define a trend. You know that an uptrend usually consists of higher highs and higher lows, something like this. And a downtrend will look something like this, consisting of lower lows and lower highs. But the thing with this approach to defining the trend is that for newer traders, it can be subjective. Here's what I mean. Say for example, you're looking at this chart. This is the chart of the dollar Canadian, and over here you see higher highs and higher lows, right? Higher lows, higher highs, higher lows, higher highs. Then it retraces very steeply and you get a lower low. Then it attempts to make a new high, but it couldn't before price retraces once more. So at this point, you're looking at the chart and you have a lower low and a lower high. And for newer traders, or maybe even experienced traders, you ask yourself, is the trend still up? Or is the trend over? Or is this now a downtrend? So you have many thoughts in your head, right? Making you very confused, making you paralyzed by your own analysis. And then look what happened next. Price rally higher, giving you a higher high. Then it retraces, forming a higher low. Then it rally higher, another higher high. So clearly the trend has resumed itself after showing you a lower high and lower low over here. And now it has resumed the uptrend. Then it retraces, rally higher once more. Now you have a lower high. Then price traded lower, and at this point now you have a lower low. And the same question repeats itself again. Is the trend now still up? Or is it in a range? Or is it a downtrend? So this is the problem I would say a lot of new traders face, because of this element of subjectivity when they are defining a trend. No doubt we know that a trend consists of higher highs and higher lows, but when you really apply it in the market practically, you will see that it has its constraint. So what I'm about to share with you right now is actually how to define a trend objectively so that you don't have to second guess it yourself. So how I'll go about doing it is that we will use 3 moving average. The first moving average is just a simple 20 period moving average. The second one will be a 100 period moving average. And the third one will be a 200 period moving average. So the 20 period moving average is basically to define for us the short-term trend. The 100 period is to define for us the medium-term trend. And the 200 period moving average is to help us define the long-term trend. So red is just basically the color of my MA. This is goldenrod. I would say it's in between golden, yellow and brown. And this black color represents the 200 period moving average. So how we'll go about doing it is very simple. If the moving average is pointing higher, then the trend is up. And similarly, if the moving average is pointing lower, then the trend is down. So how do you define whether a trend is strong or just a very mild trend? So for an uptrend, an easy way to define a strong uptrend is that if the moving average is pointing at 2 o'clock or higher, then you can conclude that the particular trend, the uptrend, is strong. And similarly, if the moving average is pointing towards the 4 o'clock direction or lower, then the downtrend is very weak. So let's look at some examples. So you can see over here is a very clear uptrend. This is the 200 period moving average, the black line. This is the goldenrod, is the 100 period moving average. And the red one over here is the 20 period moving average. So at the looks of this chart, you can see that all 3 moving average are sloping higher. But if you look at the steepness of it, both the 20, the 100 and the 200, they are not pointing towards the 2 o'clock direction. So in this example, I will conclude that the trend is up, but the trend is not exactly very strong. The short-term trend is up, but it's not very strong. The medium-term trend is up, but it's not very strong. And the longer term trend is up, but it's not very strong. Are you with me? Okay, so now let's move on. Example 2. Again, you can see that in this example, this is the 200, this is the 100, and this is the 20 period moving average. So the 200 period moving average is currently pointing lower, so the longer term trend is down, but it's not very strong because it's not pointing at 4 o'clock or lower. Similarly, the 100 period moving average is pointing lower, so it's telling me that the medium term trend is down, but it's not exactly very strong because it's not pointing at a 4 o'clock or lower. But when you look at the short term moving average, the 20 period moving average, it is pointing lower and is pointing at a minimum of the 4 o'clock direction. So I know in the short term, the trend is down, and in short term, the trend is very strong as well. So this is how you actually use the 3 different moving average and use the direction of the clock, the 2 and 4 o'clock, to help you define the strength of a trend. So let's move on to some trickier examples. So in this example, it's not so clear anymore, does it? Right? The trend over here, the 200 period moving average, the longer term trend is down. Right? You can see it's still sloping lower, but it's not exactly very steep. So you know the longer term trend is down, but it's not very strong. The medium term trend here is also lower, but it's not very strong because it's starting to flatten out over here. And you look at the short term trend. The short term trend now is up. The red one over here, the 20 period moving average, the short term trend is actually up because it's pointing higher and it's pointing towards the 2 o'clock direction. So what you can look from this chart, what you can analyze is that the longer term trend, you can conclude that it's down, but it's not very strong. The medium term trend, it's also down, but it's not very strong because both are actually, flattening out. Their moving average are actually flattening out. And the short term trend, you can see that it's actually strong because it's pointing higher and it's in the 2 o'clock direction. So it's a very simple way to actually, analyze the trend from short, medium, and long term based on just the moving average and the direction of the moving average. So in these instances, some thoughts would be, if you're a trend follower, you know that the overall trend is still lower, and right now the short-term trend is trading higher. So maybe what you want to do is to wait for the short-term trend to revert back to trade lower before you look for shorting opportunities. So this is just some guidelines or something for you to think about. So when you look at this example 4, again, this is a little bit more messy. This is the 200 period moving average. You see, it's starting to flatten out and it's still pointing slightly higher. So the long-term trend, what can we conclude? It's still up, but it's not very strong. Similarly, for this 100 period moving average, this is the medium-term trend. What is it doing? We can conclude that it's still up, but because of the fact that it's not pointing at a minimum of 2 o'clock, the trend is still not very strong. And now, what about the short-term trend? What is it doing? Well, it's pointing higher and it's at a minimum of a 2 o'clock direction. So it's up and you can say it's strong as well. So this is how you use these 3 different moving average to help you identify the strength and weakness of a trend in the market. So first thing first, you want to do is to look at the direction of the trend, whether is it pointing higher or pointing lower. The second thing you want to look at is the slope of the trend, how steep it is, whether is it pointing in the 2 o'clock direction or pointing towards the 4 o'clock direction. So with these 2 elements, you can actually help you define the trend and the strength of the trend. Okay? So I hope you find this video post useful in helping you identify the trend when you're trading the markets. So if you have any questions, any comments, right, feel free to leave it in the comment section below. With that, I wish you good luck and good trading. I'll talk to you soon.